Trust accounts are a valuable tool that make compliance as a property manager easier. Having said that, when it comes to property management trust accounting, you're really getting into the weeds. There are tons of potential compliance issues, legal issues, and state laws to watch out for. And all of these things could land you in hot water. Still, when properly set up, your tenants' funds are safe and sound, and you're protected against judgments and other potential legal issues. Welcome back, everybody. My name is Santiago with DoorLoop. Before we get started, let me remind you that I'm not an attorney, so I cannot give you any legal advice, financial advice, and yes, I am biased because I work for DoorLoop. That being said, in this video, we'll be detailing how trust accounts work in property management, why you should use one, and potential issues to watch out for those new to using a trust account. So let's start with how they work. How trust accounts work in property management. A trust account is simply a separate account you use as a property manager to manage property-related accounting. The purpose of a trust account in property management is pretty straightforward. In property management, a trust account is used to keep a tenant's rent payments and security deposits safe and separate from business operations actively. Using a trust account is critical as a property manager to make sure that your client's funds stay separate from your business accounting. Why use a property management trust account? Trust accounts are required by law in many states. That aside, you want a trust account to keep both of your accounting domains separate and organized. As a property manager, you need to simultaneously manage two separate accounting spaces, your business accounting and each property's accounting. Mixing things like your monthly office rent, payroll, and client payments in with the same account you use to collect rent payments and security deposits is a big no-no. And that's mainly because the beneficiaries are different. When it comes to your business activity, you are the beneficiary. When it comes to the activity of the properties you're managing, the owner of the property is the beneficiary. Put those two accounts together and you've got a problem. Keep them separate and you can see everything clearly, helping you run proper records and keeping your accounting clean for tax time. Plus, it will keep you out of trouble. Beyond this though, a property management trust account allows you to keep client rent payments, security deposits, and other payments safe and secure. 3 potential issues with property management trust accounting. While using a trust account for property management comes with several benefits, there are potential pitfalls to watch out for. Those come by way of accounting, co-mingling funds, and state laws. Let's break them down to understand more about how to avoid each issue. Accounting. When it comes to accounting for a property management trust account, you'll want to protect yourself from audits by keeping records of everything. That can include lease copies, bank statements, security deposit refunds, deposit slips, check copies, vendor invoices, copies of accounting reports issued to owners, everything. So make it a habit of keeping a copy of each of these items and anything else that you might think is important related to the account's activity. Sounds like a lot if you're not already doing it, but it's not so bad when you get into the habit of making a second copy of everything for yourself and simply storing it somewhere. Co-mingling funds. Easily one of the trickiest aspects of managing a trust account for property management is avoiding co-mingling of funds. Specifically, this refers to a variety of situations where property funds might mix with property manager funds. Depending on your state laws, a few examples of co-mingling can include depositing funds from the trust account into a personal or business account, depositing personal or business funds into the trust account, leaving your property management fees in the trust account for an extended period of time, or rent or security deposit funds within the trust account that are used to pay your operating expenses. So it's worth repeating, every state is different. So you'll need to check with your state's specific laws to know what is and what isn't allowed. However, everything I just mentioned are examples of co-mingling that are widely against the law. State laws. The main thing to watch out for here is what your local laws say about how many trust accounts you can have. In some states, you're allowed to set up 2 different trust accounts. An operating trust account designed to take care of operating expenses, and another for tenant security deposits. This can be ideal as it allows you to organize things even further with security deposits off in their own separate account. However, it's important to know your state laws, as some states don't allow more than one trust account for property management. Deposits. The last major thing to watch out for is a simple and straightforward tip, but one which, if not followed, can easily land you in hot water. In most states, you're required to deposit rental funds into the trust account within 24 to 48 hours. If you're working with traditional checks, this can be a big pain. It can even be difficult to do reliably with an online payment provider such as PayPal, as payments don't always go through within 24 hours and can be held without notice. Fortunately, a better way to collect rent now exists in property management software. With a tool like DoorLoop, you can collect rent automatically each month, on time, and have it immediately deposited into whatever account you choose. No manual work, no hassle. Not to mention the full suite of amazing accounting tools you get to go along with it. See how DoorLoop can help you manage your property accounting from one place. There's a link right there in the description for you. All right? Okay, so remember, by getting your accounts in order and making sure that you're using a trust account and using it the correct way, you'll save yourself a ton of potential headache and hassle. And once again, don't forget to check with your state and local laws to be clear on what exactly you need to do to be compliant. Okay, so that's it for now. Remember, if you want to get access to more videos such as how and when to issue a notice of abandonment to your tenants, or issuing a notice to tenants to remove pets, make sure that you subscribe to our channel, like this video, and share it with your friends and your team. And as always, thanks for watching.